Hey everyone, it's Rick, former investment banker, buy-side analyst and prop trader with 25 years in the game. Today I'm combining positioning, sentiment, and technicals to hunt for asymmetric trade setups. Welcome to Offsides Macro. You may have read the article titled Blackstone Plans to Deploy $500 billion over the next decade into Euro. And the article cites some pretty obvious things like so-called attractive valuations, lower financing costs, infrastructure and deregulation tailwinds. So the anything but USA narrative continues. But I think some of the recent US dollar selling and everyone looking at this terrible Dixie chart could be actually a little bit misread. And let me explain what I mean by that. I think what's not being discussed enough is the possibility of preemptive hedging that could be coming from the international fund. So what do I mean by that? If you're a European or a Canadian asset manager, for example, and your central bank is set to cut rates before the Fed, your hedge cost on the US dollar exposure is about to go up. We're in an unusual market for sure, but it would normally be pretty atypical for FX vols to not drop after a central bank acts, all else equal. So hedging earlier can mean cheaper implied vols or tighter spreads on options-based hedges. So you want to hedge early, not necessarily just because you're bearish US dollar, but because you're managing the future carry drag, so to speak. These flows certainly look absolutely relentless, and they look like high conviction selling. And I mentioned last week that Michael Platt supposedly continues to press his US dollar short, so it's really hard to step in front of that. But I think it's possible that they're also much more mechanical and front-end loaded than the street realizes. So let me tie all this back into positioning because that's the largest factor, as you guys know, in my system. You've heard me say it the past few weeks, we're getting close on the US dollar pivot and possible sentiment change. And I think that's even more so now looking at this week's data. So we'll dive more into FX later on the podcast, but let's first go over last week's setups and how they fared over the course of the week. You'll hear me use the term offsides quite a bit. I've written on this extensively, but consider it in the context of a sports analogy. Being offsides is not a place you want to be. Lastly, for the best experience, I highly recommend you open the deck listed in the show notes. The charts and tables that I reference will help you fully connect the dots. Let's very quickly hit on last week's highlighted markets. And besides the noise, which I define as markets plus or minus 0.5 days worth of vol or less, there are really three markets worth going over. And in one phrase, they were incredible, dumb, and dumber. The incredible highlighted market was crude oil that I pointed out had exited offside short and was in the lower quartile, had acted pretty bullish relative to negative headlines, etc., etc. And then we got the Israel-Iran situation, which obviously made the energies the best group on the week, up 2 to 3x across the board with a huge day on Friday. The dumb idea was my pointing out that I thought sugar was setting up like coffee, which had actually worked pretty well the prior week. But sugar was down 0.8x on the week and literally closed on lows on Friday. It does remain offside short, but the chart just absolutely looks like death. And the dumber trade was this pointing out of the US dollar possibly setting up. But that was down roughly 1x on the week. And we'll dive more into why I think the mechanical selling, which I talked about earlier, situation could actually be making that setup come to fruition soon. So let's dive into where the street is most offsides today. Open the deck linked in the show notes, and I'll let you know when to follow along when we hit the charts. Long setups include equities still, believe it or not, with the S&Ps in particular being in the offside short category. Bad news continues to be bought. We're still above 6,000, and the street still seems underinvested. And everywhere I look, everybody's calling BS on this quote-unquote bear market rally, and this rhymes a lot with 22 and 23 to me. I mentioned last week that the softs as a group were nearing offside short territory, and that continues to be the case. We're not quite there yet, but sugar and coffee are now definitively in the offside short category, so those are possible long setups. On the short setup side, the developed market FX index that I created, that I discussed last week, hovers still just below the offsides long territory, with the euro and the Swiss franc and the Mexican peso now definitively in the offsides long category. Consensus continues to be bearish US anything, and I think there's that possible deceptive mechanical selling that I mentioned earlier. The metals as a group are now nearing the upper quartile, with silver, platinum, and palladium now definitively in the offsides long category. And then we also have the ags, live cattle, and lean hogs are now definitively in the offsides long category for possible short setups. If you're in the deck, scroll with me to the highlighted market section. I usually like to start with the equities just so we can get a big picture view on where things are for risk on, risk off. And you can see the first four charts here in a group. You've got the S&Ps, NASDAQ, and the Russell either in offside short territory or in the lower quartile. EEMs in the bottom right continue to flirt with offsides long territory. Scroll with me further, you can see the next four charts are interesting FX observations that I want to make. The euro is now definitively in the offsides long category. Same with Swiss franc. Japanese yen has now exited offsides long. I like to look at the exits for further momentum. And the bottom right chart is the Mexican peso that continues to be in the offsides long category. The Dixie-weighted developed market FX oscillator, if you continue to scroll lower, I talked about last week, instead of just using a straight average across the developed markets, I weighted them according to the weightings in the Dixie, which I think is going to be a more accurate way to look at offsides long or short US dollar. And you can see the blue oscillator just continues to creep closer and closer towards offsides long territory. And I think you need to have some of the FX that I mentioned earlier that are offsides long to be on your short setup radar. If you continue to scroll, I've got the metals here, and you can see gold has exited offside short. I'm not really sure what to make of that. It's shown that way for several weeks. And you can see the rest of the charts in silver, platinum, and palladium are now either in or approaching offsides long territory. Scroll with me and you can see a group of now the softs. As a group, we're very close to the offside short as a whole. But you can see that sugar and coffee are now definitively in the offside short category, and we have cotton pretty close, and we have cocoa that has exited offside short in the last couple of weeks. Last group of charts here, we have the ags, and you can see that both live cattle and lean hogs are in the offsides long positioning. Next section is zeros and ones. If you want to look at what that matrix looks like, just send me an email. Lastly, the Offsides Positioning Index that I've created and I've talked about at length continues to tread water and actually had a pretty lousy week. It was down around 3% and the SocGen Trend Index was up around 1%. So you can see that there's a divergence here that's happening in the last couple of weeks. I think the most interesting part is the beta and vol adjusted exposure that I have for risk on versus risk off. And I mentioned last week that the equity risk on, risk off got us long from about 5,400 up to over 6,000. And the last several weeks it started to back off quite a bit. So it's sort of neutral-ish territory, in my opinion. Bond exposure is sort of nowhere, but you can see that the US dollar implied exposure is just screaming net long. So that combined with the sentiment that I discussed before, I think is making for an interesting setup over the coming weeks. Thank you for coming to Offsides Macro. The views expressed are my own and do not represent the views of any employer or affiliated institution. Nothing discussed should be considered financial advice. This content is for informational, educational, and entertainment purposes only.